Time to get some trader talk from pro options trader Alan Knuckman, the chief market strategist at St. Paul Research. Alan, you always bring long-term investors hope about the stock market. What are your trader thoughts as we wrap up the month?
Hello, Angie. The S&P is 5% off the lows, but we still have a long way to go.
Last time you were here, you talked about the buy now, pay later company, Affirm. You bought some in-the-money calls with hopes that stock would head higher. How did that trade turn out? Because Affirm did indeed rally.
All right, we had a big bounce last week. We used that to sell the Tuesday buy. So Affirm hit a 50% target just 3 days on half that trade on Friday. So that's an example of the power of options in positioning for success. The stock itself went from 19 up to 24. We had our target in place. It's come back to 19, so it was good to sell too soon.
Your new trade is in the social media sector, getting some attention from the so-called smart money.
All right, this week's trade trigger, snapback attack. Snap stock is 70% lower in 2022. Now, it has been bottoming out. We've got bullish versions bottom with new lows and not new highs in volatility. And we also have smart money buyer spike. So some positives here. The stock has been stuck between 12 and 16 sideways, forming this bottom base. A breakout of that $4 range targets 20. 20 also is a gap to fill up above. So the play here is a September $12 call. Let's remember 1188 is the extreme low from June 15th. So the $12 call is in the money. That option's trading about 350. It's got 3 months of time and a 70% delta. So again, if that gap gets filled at 20, this option doubles in value.
Alan, what are your trading day takeaways for us?
All right, trading takeaways. Trading takeaway number 1, VW. The VIX has formed a wedge. The fear factor has had a series of lower highs and higher lows for now 3 months. We've been trading between 18 and 38 in this big wedge pattern here. So the pivot point is 28 where we stand right now. A breakdown in the VIX means an upsurge in the S&P. Number 2, gap attack. We just talked about the upside gap in Snap. You know, when it comes to gaps, it's not a matter of when, it's not a matter of if they get filled, it's a matter of when. So looking at the S&P, the gap at 3,900 that we mentioned 2 weeks ago, that was the surge that got filled last week. And there's another gap up above at 4,000, which is another 5% higher. All right, number 3, season soon. Earnings season starts in 2 weeks. So we get kicked off with the banks. Now the PE ratio in the S&P right now is at the 15 level, below a 10-year average. So stocks are cheap in relative terms. Now expectations of earnings growth is 4%. So that seems to me to be a low bar to hurdle, in my opinion.
Alan, thanks so much for being here and enjoy your summer place for the 4th of July.
Thank you.
Go to businessfirstam.com for where to see our show on TV.